students, welcome back to our channel. So in this video we are going to discuss the BBA semester 5 financial market and services full subject revision. Okay, so this is the notes this is my the handwritten notes. So first important question in long is explain the structure of financial market service in India. So what is this financial market service in India? Okay, so a financial market is a marketplace where buyers and sellers will come together, okay, to share their bonds, debentures, currencies, any other things. Okay, so in other terms we can call that as a money flows from those investors who need to invest. If someone is investing in your business, if someone is investing in the government platforms, that money flows is called financial market services. It is a marketplace. Okay, so example, here the example is also there. When you buy shares of Reliance on the stock market, you are providing funds to the company, and in return you are getting the dividends or price appreciation. See, where a common person is giving money to the company, yes, so that, for example, I am buying the Reliance shares in the stock market, so indirectly I am putting my capital into that market. I am helping them. In future I will return the dividends, whatever the profit that company is getting, in that I will get the share. So that is called dividends. Okay, so next important is structure of financial market in India. So in this structure, two types we are having. First one is money market, second one is capital market. So money market is nothing about the short term funds. Okay, so where the person is getting the liquidity form of amount. Okay, it is mainly liquidity, like quick borrowing or getting the money from the banks, companies, or any other government platforms. So short term period is nothing about the less than a year. So why it is purpose is nothing about the to manage your cash flow in the organization. So the main participation will be RBI, commercial bank, NBFCS, yes, government, mutual funds. So these are the persons of the main participants. The main instruments of money market is nothing about the treasure bills. So treasure bills is nothing about it is issued by RBI. What it will do, it will make the government to meet their short term needs. For example, right now I want 1 lakh rupees. So treasury bills, what they will do, RBI will give you a issued, or they will give you the amount, so where you can fulfill your short term needs. Next, CP, commercial paper. So it is a short term promissory notes by the companies, like promissory notes they are providing to their persons. Okay, next is CD, certificates of deposits issued by banks. So what they will do, it will be issued by banks to raise their short term funds. Okay, next you are having call money market and repo. Okay, repo agreements you are having. So these are the importance of that. Importance is nothing about the to get the financial finance of the terms, it will be helpful. Okay, next you are having the capital market. What is the meaning of capital market? Money market is for the short term funds, capital market is for the long term funds, means more than 1 year. So in the law, first what you will have, primary market. Primary market is nothing about the new securities issued by the companies. So in this you are having the initial public officer, right issues, everything. For example, if a company issues shares to the public for the first time, if they are issuing the shares to the public, that kind of comes in the primary market. Secondary market is nothing about it, already issued securities. Already issued securities is there, means that comes in the secondary market. Next one, other sub markets. Other sub market, in this you are having foreign exchange, debit market, derives market, everything you are having, not much important. Okay, and next you are having the regulatory framework of financial market of in India. So in in India, what are the regulatory frameworks? In this you are having the first one, Reserve Bank of India, RBI. So what it will do, it will do the regulates the money market as well as the monitor the policies also. Next, SEBI. What is the full form of SEBI? Securities and Exchange Board of India. What it will do, it will give the security to the protectors, it will protect the investors, and it will gives you fair trading practices also. Okay, next, IRDAI, that means Insurance Regulatory and Development Authority of India. Next it will do, next you are having PFRDA, that is Pension Fund Regulatory and Development Authority. So in this, the pension funds whatever you are having, that will be regulates. Next, Ministry of Finance. So it will do what it will do, whatever the fiscal policies you are having of the government, it will oversee that. Okay, so this is about that. Okay, next you are having the financial service sector. In this financial service sector, leasing, purchases, factoring, it is a common thing only. You can easily elaborate that. Okay, so next important is all financial services. Financial services is nothing about the which is providing by individuals or companies or government or any other management, that is called financial services. For example, if a bank gives you a loan, that is called financial services. If you buy insurance, that is called financial services. If you invest in mutual funds, whatever the in return you are getting, that is called financial services. Means they are giving the services. So this is important. What is the objectives of that? Means risk management. Okay, it will ensure the unexpected losses. Yes, encourage investment, economic development will be there, mobilization of savings will be there. Yes, capital formation will be there. This type of things you are having in this answer. So that is important, and whatever the most important, that only I am discussing. Okay, so next important is structure and function of Indian financial system. So Indian financial system in a country, what it will do? It will do the institutions, markets and services, any other things. Okay, it will connect to the people. It connects the people who have the surplus money, like for example investors or else householders, like that. Okay, so the people who are having shortage of money, this financial system will do the marketing systems. Okay, if you deposit your money in a bank, the bank, what they will do, it will invest in the business. The business used to start a company, so company will get the jobs and they will pay the interest to the bank, and you will earn from the interest from the bank. So if we depositing fixed deposit in the bank, after 5 years you are getting in return 10%, right? So what bank will do, it will invest to the businesses. So business will start a company. So company will give certain amount to the bank. Bank will keep certain amount and they will agreed amount they will pay for you. Okay, simple example. Okay, so what is the objective? Same in the previous one, whatever we have wrote, you can write that only. Risk management, facilitating credit, mobilization of savings. Yes, economic development, economic growth. Like you can include that answer also, and you can elaborate that. Okay, so see the repeated answers only you are having. Okay, there is no need to worry in that. Okay, so repeated answer, repeated things only you are having. So what you need to do is attempt every question. Clear? Attempting every question is mandatory and it is important also. Okay, so that's about the unit number 1. Okay, welcome back to our channel. So in this video we are going to discuss the financial market and services unit number 2 explanation video. Okay, so the first important question, primary market and secondary market. So what is mean by primary market? So primary market is the market where a place where the buyers and sellers will find together. Okay, they will come to place, they will share their bonds, debentures or any type of things. Okay, in this primary market is nothing about the new issue market. Okay, secondary market is nothing about the stock exchange market. Okay, this is the complete difference. So both markets will do the financial system functioning only. Okay, it will be helpful for you to mobilize your savings. Okay, for the productive investments. Okay, so both will be helpful. So next one, primary market. What is mean by primary market? So primary market is a place where for the first time companies or governments or any other financial institution raising their fresh capital. Okay, so for example, when a company issues shares through initial public offering, that is IPO, that type of things will be considered as a primary market. So in this functions, first it will raise new capital. Yes, it will be helpful for the government, it will be helpful for the capital formation, it will mobilize your savings, like it will be productive investment. Yes, so these are the main key points. What is the methods of raising capital in primary markets? First one, public issue, like IPO, initial public offering. This is the best example. Next, private placement, like a small group of investors will be there, no, instead of public, they will take it from them. And right issues, and means when the shareholders are having the right to purchase the additional shares, they will be offered by the public, it seems. Okay, next one, preferential allotment. Preferential allotment is nothing about the promoters or any venture capitals or like that. Okay, so this it. Next, what is meant by secondary market? Secondary market is nothing about the where existing securities are traded. Already the existing customers will be there. No, like for example, trading shares of a Reliance, Infosys or any type of CCS. Yes, the Bombay Stock Exchange or National Stock Exchange, like existing securities are traded here. So that is called secondary market. So here what is the functions? Liquidity to investors, means they can sell any time with their securities. They can flexible in nature. They will have the liquidity also. Next, price discovery. It will be helpful for them to get the fair price securities also. Next, continuous process. Ongoing process and continuous market will be running over there, and economic indicators and encourages investments, everything like that, it will be there. Clear? So these are the components and functions of secondary market. So what are the components? Components is nothing about a stock exchange, means where the BSE, like Bombay, we have discussed, no, Calcutta Stock Exchange, CSE, this type of organized and regulated markets will be there for the stock exchanges. Okay, so this is the most important question from unit number 2. Second important question is functions of stock exchange. So functions of stock exchange is nothing about it is a marketplace. Okay, stock exchange is a marketplace where shares, debentures, bonds, everything will be bought and sold. Everything will be bringing and selling it. Okay, so it will act as a relationship between like a link between investors and the company. They will be like acting as a mediators. So what is the major examples for this? Means Bombay Stock Exchange, National Stock Exchange, Calcutta Stock Exchange. So these are the major stock exchanges in India. Okay, so meaning, so a stock exchange is nothing about the platform where investors will buy and sell their securities. Such kind of things will be called as a debentures or a bond or a issues or any type of thing. Okay, next one, importance. Why it is important? Why this stock exchange is important? Means barometer of the economy. It acts as a barometer, like it will act as a mediator like that. Okay, so market availability will be increasing, transparency will be there, safety will be there, fairness will be there. Yes, company will raise their funds, it will elaborate their funding nature also. So this is also one of the important question in unit number 2. So you can learn this 7, level 12, many points is there from the examination point of view. Any 3 to 4 side headings is more than enough, and you need to elaborate in the 6th time. Okay, so what is everything in detail it is having in this notes, but as per the meaning of that particular answer, much not important in that. Clear? So that is also main important concept in unit number 2. Clear? So unit number 2 we can expect a stock exchange question. Okay, so that's it. And in unit number 2 you can just look into the IPO. Okay, so you know about the IPO, no? So just now we have discussed, so IPO process, how it will be there. IPO, what is the purpose of that? What is meant by IPO? Initial public offer. So this is also important, not much important, but compulsory. We can expect a stock exchange question, first 2 questions in the examination. So this IPO might be useful for the short questions also. Okay, so this is about the unit number 2. Just to follow these 2 concepts along with IPO, that will be more than enough from unit number 2. Clear? Now the unit number 3 of financial market services is write a detailed note on evolution of leasing industry in India. So leasing is a party where it allows the another party to use their asset for a specific period of time. Okay, so that is called lease rentals. Okay, so it is an important alternative, especially for the companies who need expensive assets like machinery or any type of equipment or any type of vehicles like that. Okay, so this leasing industry in India has grown from small, like it will be developed from many segments. So it will be very useful development. Okay, so what is the origin of leasing in India? So leasing in India was developed in the year 1973. So the first Leasing India company was established in Chennai. Okay, so first we have established in 1973 in Chennai. What it will do? It will do the bank loans, hire purchases, IFCI, IDBI. We have discussed in your before subject also IFCI, IDBI, ICICI. Yes, so that is about that. So growth they have asked, not much important. Like how it is the evolution has been there from first to last. You can write it by your own also, ra. Okay, na. So that is the first answer you are having in this unit number 3. Next unit number 3, next important question is advantages of leasing. So what is the advantages of leasing? There are many advantages. For example, you can see an example over here. If a company wants a machine worth 10 lakh rupees, but it is not having that much money to buy it. So what this lease will give? It will give for the rentals, like for month 25,000, like that. Okay, so what it will do, with the help of leasing you can enhance their productivity. Okay, so you can use the production in the organization, everything will be possible. Yes, so there are many advantages for that. Okay, so what are the advantages? First one, huge initial investments, no need to having any huge paying for the price of that particular machinery. So you can in that you can easily lease the account. Okay, next one, easy source of finance, alternative to borrowing, like instead of bringing in a 10 lakh rupee worth, you can easily alternate to borrowing that. Next one, flexible in nature, it will be understandable, it will be payment schedule, everything will be customized. Tax benefits also will be one of the major importance for that. Yes, next, balance sheet financing. Balance sheet financing is nothing about the leased assets will not appear in balance sheet, hence the debit capacity will be less. Yes, so that is also main important advantage of this leasing. So any 7 to 8 importances is more than enough, ma. Okay, next important question is, what are the problems faced by venture capital? So venture capital will be very much helpful in promoting the new techniques, new production or new things in the financial entrepreneurs. But here the venture capital in India faces a long disadvantages, many disadvantages. First one, well developed exit routes. Means in India the profitability of the investments has not at all startup. Like startups, what they will do, if any initial public offices will be there, mergers and acquisition, backing pay period or payback promoters, like buyback promoters will be there. Yes, so it is one of the major biggest challenge they are having to face in this Indian startups. And next one, high risk and uncertain return. So it is not at all high chance of risk will be more and more usually in fintech technology like type of innovation sectors. So these startups will have the unstable cash flows, risk will be more, like that. Okay, next one, lack of experienced entrepreneurs. For the first time entrepreneurs will be having a business planning, organization, management, everything like that. What it will do, it will control the cost and it will handle the competition also. Okay, so like that you can write it by your own. When you are writing, ma, try to write the flow charts. Okay, try to draw the diagrammatic representation of your points, like that. So from third unit definitely there will be a question related to the leasing. Okay, so either they may ask what is leasing, what are the purpose, what is the advantages, disadvantages, like that they may ask from unit number 3. Okay, so this is the notes PDF, ma. This PDF is available in our Telegram group for free of cost. Okay, so I have already uploaded here, so just click on the link which I have given in the description box and get this PDF. Clear? So I hope that you have understood this third unit. That's about the video, ma. See you all in the next video. Bye bye, students. Students, welcome back to our channel. So in this video we are going to discuss the unit number 4 of FMS subject. Okay, financial market and services. In this, the first important is credit rating mechanism in India. So what is this credit rating mechanism? Whatever the modern financial system we are having in India, it will be helpful how you need to measure the risk. Okay, so that is why credit rating is very much important and it acts as a report card. Okay, so repayment ability, government, company, financial institutions, it will be helpful for them to make the decisions, to make the transparency in the financial market. So what is this meaning? Means evaluation of your credit risk. Okay, if you are taking any debt instrument or borrowers, that time the probability of the borrowing will be repay the loan. It will repay the loan. For example, in simple words, it can be say that whatever the credit rating agencies is there, it will be shown how safe and risky the money lend will be there than that. Okay, so for example, when you are taking any loan, what they will do, they will see your credit score, CIBIL score. So same like that. Okay, if a company issues bonds, a credit rating agency will do the study of their financial strength, whether the company is having the profits, whether the cash flows is coming, business performance is there, management equality is there, like that. Okay, so what it will do, it will promote the transparency, it will make the investors to make the information. Okay, so reduces the risk, it will be helpful for the companies to raise their funds, it will act as a guide. Okay, this is also one of the major important question ma. So next, credit scoring is important, so related to that you need to write the answer in the examination. Next important question is merchant banking, roles and functions of merchant banking. So what is the merchant banking means? Merchant banking is nothing about the consultancy services. What it will do, it will manage your investments, it will manage your finance, it will reconstruct your business activities also. In simple words, it can be says that expert financial services like an issuing of the management, like advisory services, mergers and acquisition, like this type of things. So what is the example for this? Example, we can write IPO, that is initial public offer. Okay, so what it will do, and it will be approved by the SEBI. Okay, it will issues the prices, it will allot, the smooth allotment will be there. Yes, it will be asking for the marketing and underwriting also, it will arrange them. Clear? So this type of things will be there. So what is the definition of SEBI? A merchant banker is nothing about the business of the management. Okay, so what it will do, whatever the rendering corporate advisory is there, that kind of issues management will be available. So that is the meaning of definition of SEBI. Okay, so SEBI is important and merchant banking is more important in unit number 4. Okay, they may ask about the features of merchant banking also. The first one is consultancy services. What it will do, it will advise how to launch an IPO or how to acquire another firm, like that. It will issue management also, like public offer, private offer, initial public offer, IPO, yes, follow up, like that. Next, underwriting of securities. Underwriting is nothing about the new shares, new issues. Okay, fully subscribed to buy the remaining shares, like that. Next, portfolio management. Portfolio management is nothing about the where you can invest the, it will get the maximum rate of returns, like that. Okay, so that's about the merchant banking from unit number 4. Though merchant banking is much more important than anything. Clear? Credit scoring and merchant banking, these two questions probably will be enough for the unit number 4. Okay, so this PDF is available in our Telegram group ma. So that's it. If you're having any doubts, let me know in the comment section. See you all in the next video. Bye bye students. Hello students, welcome back to our channel. So in this video we are going to discuss the financial market and services unit number 5 explanation video. So the first one we are having my evaluation of mutual funds. So how it has been evolved. So mutual fund is nothing about it will collect money from many investors. Okay, it will collect the money from many investors and it will invest in such securities like bonds, shares or many money markets. So a mutual fund is nothing about the professional fund manager to expect the maximum returns from the investors. So that is the mutual funds. Okay, so mutual funds will have the large investments in complex securities, like that. Okay, so mutual funds evolution has been done like phase 1, phase 2, phase 3. The phase 1 first is 1963 to 1987. So it has been first begun in India with 1963, and the government of India and Reserve Bank of India has been approved in 1963. So what it has been done, it has been offered a stream returns and safety during the year. Collective information investments will be there, like that. Okay, second phase is 1987 to 1993. So it has been become a public sector mutual funds. So previously it was only government, right now it will be having the public sectors. And the third phase is 1993 to 2003. What it has been done, it has been entered in private sectors also in third phase. Okay, and phase number 4 2003 to till present. What it has been done? It has been done in a modern era where it has a rapid growth, where investors will participate in that. Okay, so these are the 4 phases of things you are having, ma. Next important is asset management company, AMC. Asset management company is nothing about the pooled funds. Okay, so what it will do, whatever the funds is invested by the funders, it will do the stocks, bonds, mutual funds, any other investment objectives. The main aim of this thing is to increase their maximum returns. Okay, to increase their maximum returns and also managing the risk also. Okay, that is called asset management company. Example, HDFC, ICICI, SBI, okay, Nippon Indian Mutual Fund. You are having this type of things. So what is the features you are having? My first one is net assets value. Net asset value is nothing about the clarifying the real asset. Okay, so net asset value will show the per unit market value of the fund. Okay, how much is there in the market value, like that. Next, professional management. It aims to give the best possible returns. Yes, diversification of investments is nothing about the overall risk of the portfolio. It will be helpful. Transparency will be there, like that. Okay, next, functions of AMC. Functions of AMC is nothing about the same things. You can write it over here. Advantages and disadvantages. Disadvantages will be lack of control will be there, risk will be there, over dependence will be there, over diversification will be there. So like that, asset management company is one of the major important question from unit number 5, and the first one is mutual funds. So these 2 questions is more than enough, ma. So that's about the unit number 5. This PDF is available in our Telegram group. Okay, so all the best for your examination as well as your preparation. If you have any doubts, let me know in the comment section. See you all in next video. Bye bye, students.